Chetan Seth is with us. He's Asia Pacific equity strategist at Nomura. He's with us. Chetan, great to have you with us here. Thank you very much for joining us. Always a pleasure. Just your thoughts in terms of what you're picking up, Chetan. We'll get your earnings estimates and what you like as a house, but just wanted feedback first. This non-stop FII selling, are we getting to some sort of a climactic action, or there is, it's going to continue? Maybe large amounts, maybe drip, whatever. There's no turn in sight. Where do we lie on this question on terms of foreign flows?
Well, from my perspective, I feel that probably this drip outflows will continue for India. And the reason is very simple, that there's a lot of positive momentum for some other larger markets in Asia and emerging markets. And that's primarily Korea, Taiwan, because of the AI thematic. And then clearly things are turning in China. So these are large markets, main, competitors of India. And those are really getting all the investor attention. And if I look at India, from my perspective, I'm less concerned about macro or micro earnings, but I'm most concerned about the tensions India has with US. So if those tensions do not cease or reduce from here, I guess that will continue to be an overhang on the market.
Chetan, hi, good morning. Who would have thought, right, that in April, when all of this tariff business was announced, we thought that this would be the least of our concerns and we'll be quick to get the deal. But here we are, October, and still counting. So that's one overhang. But, is it a factor where the moment there's a change, do you expect like a huge gush of liquidity, foreign liquidity to come in the market? Because, foreign funds have been under-owning India for such a long time. So will it be a very quick shift and therefore a gush of liquidity? Or will it be only a gradual recovery, even if we start getting some sense of a thaw?
Well, I think the thaw should be unequivocally positive for India. I don't think so you will see a gush of liquidity, because it's also a function of what other markets in our part of the world do. But let's say we are in first quarter of next year, there's possibly a thaw in India-US tensions. And by that time, maybe the tech, this AI thematic has rolled over, or there are more concerns about monetization, capex, and China markets are also going the other way, because maybe, the US-China tensions also escalate. I think then you can expect a gush of liquidity because investors will just go to the markets which have underperformed, which is India. So, but, if it's just, if the other markets continue to do well and they have positive catalysts still in place, I only expect a little bit of incremental liquidity coming in. But for now, for me, the major concern is really US-India.
Okay, all right. Hi, Chetan. Good to see you. Well, you have highlighted in your note that valuations are a little bit stretched, but they're not yet bubbly. Do you think, though, we're bracing for a somber end to 2025? Barring India, most equity markets actually have done well. So do you think we see some bit of, tepid action towards the end of this year?
I think it's possible, but to be honest, really tough to call. But the simple thing I will just say is that valuations in the 4 large markets of Asia, including India, are still on the high side, right? But, valuation can stay rich for a prolonged period of time, so long as your positive developments continue. That's what I always tell clients. It works the other way also. You can have cheap stocks. They will remain cheap for a prolonged period of time unless you see positive catalysts. So it's tough to really say, but I think for now the momentum is there in some of the other markets. Valuations are on the higher side. We're still seeing continuing earnings downgrades, by the way, for Asia. And actually, on that aspect, India is not dissimilar. So I see a lot of commentary about people saying that earnings downgrades are happening in India, but it's not very dissimilar to what we see even in markets like Taiwan, Korea, and even China. Actually, China has bad earnings downgrades as India. So tough to say on a 3-month view. Our targets are, by the way, below where the spot levels are. But again, it's really tough to say. My sense is, I think probably in the near term, positivity can continue. Maybe in December, because this has been a fantastic year for investors, maybe you'll see some risk off or profit taking. People will look to close books in maybe late November before the year-end holidays.
Right. Chetan, just to take that point forward, y'all had that tactical call on China, which has worked beautifully, but you'll have a structural positive on India. Do you think bulk of that tactical call on China has mostly played out? Since, as you're mentioning, that earnings are still not picking up to the extent that is expected. So your view on both?
So, very relevant question. I'm glad you've asked. So, see, China now trades at 14 times. On 13th of May, when US and China met at Geneva, that's the day when we upgraded. And back then, our simple thesis was that if you see relative stability in US-China, it would lead to reassessment of risk premium that's been attached to China stocks, essentially PE rating. So the story was not macro, it was not GDP, it was not property, it was not earnings. I think that's played out. Probably there's more to go because at 14 times, it's still not like 20 times or 18 times. So I think there's, and AI theme is also now supporting many parts of the China markets. There are hardware players, there are cloud computing companies. All these companies will benefit, and they have proper business model. They are free cash flow positive companies. The second largest or the largest company in China, Alibaba is FCF positive. So I think it can continue. For India, the problem is that you would make a punchy call that maybe on a 6-month view, India might outperform because it has underperformed the other markets quite significantly. The problem is that on an absolute level, India has still not gone down a lot. I mean, it's like, if I look at Nifty and Sensex from the high point of September 24, you're just down 5%. Yes, Indian investors may feel that, look, India has not done anything whereas others, NASDAQ and all these markets are doing well. But it has not come down. So I think there's, valuations is a concern. The optics narrative around US-India is quite negative, right? And as far as the structural view is concerned, I'll just say that, look, it is there, but again, I think that that view can be challenged if you assume that these US-India tensions continue, and the US potentially also aims at India's very important services export sector because it has, in my view, significant implications.
Absolutely,
so, that view will depend on.
Absolutely, Chetan, and I was just thinking about that. We know that it was 2% of GDP, right? That's the value of our goods export to the US. But yet here we are, and we're having this conversation with you. And the dominant concern in your mind on India is just India-US, just what's happening at a diplomatic and political level. So just for a moment to drive away from that and to talk about earnings here. Now, if we had fantastic 15% earnings growth, maybe that could have made a compelling case, irrespective of the tensions, to be in the market. But we don't have that right now. But do you see that earnings trajectory pick up in a meaningful way? I mean, look at what the RBI is saying. They're saying there's ample space to support growth in the coming policies. Though I think Sonal was expecting a rate cut this time around. Didn't happen. I mean, you're India economist. But I think she's still working with at least 50 basis points rate cuts in the coming few months. Then there is a GST cut. So do you see any meaningful pickup in corporate earnings?
Well, as a house, our India equity team, they continue to pencil in like 4 to 6% earnings growth downside, looking at 26 and 27, right? So probably we are 1 to 2% already down. So probably another 3-4%. I haven't done the proper maths, but as net, we are expecting earnings downgrades cycle to continue. That's the house view. And some of the targets that we have, whether it's for Asia, ex-Japan, China, or even India, they already assume some earnings downgrade. Even at broad, by the way, AEJ level, which is what I look at, generally we expect earnings to see cuts going forward. One thing which I will say is that there's a little bit of an upside risk now because of what's happening in Korea, specifically with some of these memory stocks. So maybe there's less downside risk, but generally speaking, I feel India earnings will probably continue to be earnings risk.
Continues to be earnings risk, and remember we put out it was I think in early August, right? Lack of AI options.
In India, right?
Yeah.
And perhaps that is also because it is every day you wake up. You were talking about Surabhi in the morning that, by the way, Sam Altman was in Korea signing up deals for a Stargate project, right?
Yeah.
Samsung is going to...
Mitsubishi did it, which is why those shares were surging in Japan this morning.
Yeah.
And then all these $100 billion checks that are being cut across the AI universe.
ARC, which is Cathy Wood, she's apparently bought... Chetan was talking about the Chinese names, Alibaba. I think she's bought, not that that is a point of endorsement. Actually, it is.
On that, let's ask Chetan. Chetan, so we know that, one major sort of shortfall here is that we don't have deep tech or AI themes in India to play, and the rest of Asia does have that. But do you see a sustained move? Or will investors question, as there are some questions around US tech, will there be some questions around Asia tech? And therefore, that could be, to some extent, helpful for us. So I don't know if you see anything over the next 6 to 8 months which starts punching holes in the Asia tech narrative.
Yeah. There's almost 100% guarantee that in the next few months or quarters, there will be a big question mark on these names as well. But of course, the problem is the timing. I have spoken to investors 6 months ago, 12 months ago. There were investors who were skeptical about valuations and AI. Many of them have been proven wrong. And as of now, there are still people who are skeptical. If you remember, I think we were just talking about it. Last week we had a 3-4 day pullback in US stocks and NASDAQ because after this NVIDIA circular deal with OpenAI and all. And that also led to this bubble fears. So I think the problem with bubbles is first of all, I don't think so we are in a bubble. I think it's very different. But, let's say we get to a bubble. The problem is that it's very difficult to pinpoint exactly when will that bubble burst. So short answer to a question is, I think there will be questions, but I don't think so it's in the near term. Maybe it's a 26 story or a 27 story, because at some point in time, the market, the investors will question the US hyperscalers, people who are spending so much money on hardware spending, which is obviously benefiting some of the hardware stocks in Asia, particularly Korea, Taiwan, and some in China. There will be questions, and that's when, if some of these companies announce a cutback in capex, right, or the actual capex doesn't meet market expectations, that is potentially one catalyst where you will see a kind of a pullback on some of these stocks. But timing is very difficult.
By the way, I'll throw in one more angle, which is obviously slightly off tangent. But so there was news recently that HSBC has put out a release saying that they've operationalized a quantum computer and they showed results of it. Okay. Maybe it was a slow news day. That's why it got a lot of press that day. It was last week. I think it was 6-7 days back, right? And it said that there's some 35, and this was on the bond side, 35% more efficiency in filling bond quotes. I mean, on the bond side, right? And they said, well, it's a big breakthrough. So now one quantum computer, according to them, is equal to one data center. Yeah. So think about it, right? I mean, quantum, just the technology is seen to be 5-6 years out. Who knows, something somewhere sort of comes up. So you've basically been investing in the wrong kind of compute. I don't know. It's just a question which I don't think anyone is even asking. I'm not saying that this is all ready, is a bubble to be pricked. I don't think it's a bubble. It's real. But, technology is...
See what Chetan is saying. Chetan is saying a couple of months down the line, people will start asking harder questions, and all your fancy GPU trades and the memory chip trades and quantum computing trades. When, the pendulum swings, it'll be back to value retailing. It'll be back to all the shoes that are selling in India. It'll be back to the 1 rupee sachets and the volumes they're generating. Apna time aayega, Prashant.
AI, when you have an AI body double, why do you need shampoo?
Oh, gosh. You're making me depressed again on Friday morning.
But I think, by the way, on that note, yesterday, OpenAI finally said that they've concluded that secondary share sale, valuing the company at $500 billion. ChatGPT came out in November 2022. Yeah. The fastest $500 billion I think we've seen. Obviously, it is by far, no questions about it. Chetan, great to have you with us here. Thank you very much for joining us. Really appreciate your time and good conversation.